Right, we are live. Good morning, everybody. Happy Thursday. Welcome to the morning show here on Stock Market TV. You have me, Spencer. We have JC. We have Steve. We kind of have JC and we kind of have Steve. Long story. JC has to dip out early. Steve is on his phone, like his iPhone, like vertical picture. Kind of weird. It's going to be a weird show. We might end early. We'll see what happens. I was just talking with Fonz, though. Really quiet morning. Has there been a morning this quiet in a while in terms of the overnight markets, news, headlines, pre-market gainers and losers? Not a lot happening this morning, but I'm sure the guys have things to discuss. So let's get right to it. Drop me a thumbs up, please, and thank you. Here we go.
All right. Mr. Steve Strazza, very vertical today.
Very vertical.
Very vertical. Thanks for putting a shirt on. That was good.
I wasn't planning to be on video.
Yo, ready for this? And we'll get into the markets. Ready for this? European banks up 3% this month. Okay, European Bank Index up 3% this month. That is after being up 23% for the first quarter. So that puts European banks up 26% year to date, 3% this month. Are those things you see in bear markets?
No, absolutely not. I was just writing that, actually.
Not something you see in bear markets. I got another one for you, but we'll save it for after the rundown. What do you say?
Oh, we can do that.
I love how Jason Wang is calling Strazza DJ Pastelitos. Now that is funny, right? I know funny. That's funny. DJ Pastelitos. Hell yeah. All right, ladies and gentlemen, we got the Dow futures down about 40 basis points. It's 170 points to the downside to Spencer Israel's point. Quiet morning, eerily quiet. 39,600 for the Dow. S&P flat this morning, just under 5,400. That's 200 points below 5,600, which is the big level. 42,000 for the Dow, about 2,400 points, 24,000 points, I should say. Right? No, 2,400 points, 2,400 points away from the key level in the Dow. So approaching that level, if equities were going to sell off, particularly at the index level, these would be areas where one would expect a sell-off if such thing was going to happen. However, on the NASDAQ's actually up this morning. NASDAQ futures up 14 handles, 18,820. We got 30-year bond futures up 0.5%, pushing 115. We got crude oil up 1.5%, 63 and change. Copper up 0.5%. Copper at 486. Gold up almost 2%, 33.50. With silver down 0.33% at 33.5. The VIX down to 28 for the VIX. Looking for that VIX sub 15, in my opinion. And I think about what the market implications of a VIX under 15 are.
15.
Shareholders of stocks are probably getting rewarded there. And then finish up in old funny money. Bitcoin down 1,000 points this morning, just under 93,000. You got Ethereum down 40 points. That's 2.25%, 1755. Old Solana just under 150, down 2% on the day. With the total crypto market cap, Mr. Spencer Israel, 2.86 trillion. 2.86 trillion, inching higher.
So about flat, right?
Yeah.
Yeah, about flat.
Yeah. I mean, big 3-4 days there for crypto. So
yeah.
Flat morning is
Okay, yeah. I'm not disagreeing with you. It's about flat.
What stands out from this morning's futures contracts, gentlemen?
Nothing stands out to me.
I think that's what stands out is that there's not, it's the quietness. I think you already nailed it, right?
Yeah.
It's the real eerily quiet out there. Not much happening at all, right?
Yeah, I do wonder what like the most recent smallest range we've had in the major indexes are, right? Because the ranges have obviously gone up here the past few weeks, past month, but today so far really quiet. So yeah, the chat's talking. Someone mentioned IBM in the chat. It's getting hit. There are earnings reports, so there is movement off of that. But outside of that, really nothing. All right.
With how good international stocks continue to be, it gets harder and harder for me to think that the U.S. stock market, the most Teflon market in the world, is just going to quit while all that's going on.
Big moves this week in Italy. Italy hitting the highest levels, hitting new 3-week highs. Egypt absolutely ripping. Brazil, Strazza's been all over that, ripping. Argentina making big moves. Australia hitting the highest level since the beginning of March. So really interesting strength globally that we continue to see. Switzerland making moves, Japan new highs, Amsterdam new highs. There's a lot happening. Okay, this is what I wanted to mention while Strazza gets his audio fixed. We can't hear you, Strazza. So with Strazza, we get his audio fixed. One of the things that I wanted to mention was slide 4 there, Spencer, if you will. So we are looking at the American Association of Individual Investors. Over half the respondents are bearish the U.S. stock market over the next 6 months. Over half. That makes it now 9 consecutive weeks of over half the respondents being bearish the U.S. stock market over the next 6 months. That has never happened before in history. This data goes back to the 1980s. Investors are more scared today than they were at any point during COVID, which is wild. At any point during the Great Financial Crisis, which is wild. And I was there personally for both of those. And I can tell you that we were staring into the abyss. In both of those situations, I swear to God, I was there. I was staring into the abyss. It was the unknown of unknowns. I remember the Great Financial Crisis. I remember walking up Park Avenue, like kind of right by the JP Morgan headquarters, on the phone with my buddy who was he was our shortstop in high school, and he was in, dealing with all kinds of collateralized debt obligations and the derivatives thereof and the derivatives of those derivatives. He was caught up in all that mess. That was his job at the time. So he had, insider knowledge as to what was happening in there. And I remember vividly being like, yo, Weicho, what is going on? And then later on, they went to all their customers that they dumped all that garbage on because he was an analyst on the team. And then they went because they knew where all the bodies were buried. And then when shit hit the fan, they went to all those institutions and offered pennies on the dollar to get them out of that mess. And, when they were offering pennies on the dollar for those things, they already had a buyer at a higher price. So there were huge spreads. So they made a lot of money dumping all that crap onto the institutions, made even more money buying it back for pennies on the dollar and flipping it for 2-3x. There was a window of time there where my particular friend was making a lot of money. Good for him. And so I remember vividly talking to him, be like, what the fuck is going to happen? I remember walking up Park Avenue, dusky, literally we're staring into the abyss. This was 2008, early 09. And then COVID, how long are we going to be stuck at home? How long is this going to be? Work from home forever. Doctor's visits are non-existent anymore. We're not even pulling the flags on the golf course anymore. Our pets' heads are falling off. I remember being like, wow, how long is this going to go for? Both of those times we were staring into the abyss. Investors are more scared today than either one of those times. That's kind of wild.
That doesn't make sense to me.
So what does that say to that? What does that mean? JC, what does that mean? What it means to me is we're buying stocks. That's what it means to me.
I'm with you, Spencer. It means that some of this sentiment data, not that I trusted them before this moment, I trust them even less now. To tell me that there's a higher degree of uncertainty in today's market than back in the financial crisis or even the pandemic is crazy. And this one's nuts too.
Yeah. Well, to be fair, we're talking about 9 consecutive weeks. During COVID, it was fast. So
that's what I was gonna say that because peak to trough was 30 daars.
Right, exactly. But Great Financial Crisis was going. I mean, that Bear Stearns blew up. I mean, think about how long Bear Stearns blew up a year before the market bottomed.
Right.
That felt like it took years and years.
Right. Exactly. So they had plenty of time to get scared. So the COVID, we'll give it a pass, even though we were staring into the abyss. But the great financial crisis lasted a long time. They had plenty of time to get bearish.
But my point is that any of these sentiment data sets that suggest that things are worse now or more pessimistic now in whatever way than they were back during the financial crisis, I'm just not buying it. Are you having the same conversations with people that you were having back then?
No, I without minimizing today, there is definitely a degree of uncertainty if you are into the whole U.S. exceptionalism thing, right? And trade policies that have been in place for 100 years and whatever. There's some uncertainty there. I don't want to poo-poo that, but to say that it is more than a literal global pandemic when we didn't know, like I don't know about you guys, I was wiping down my groceries, right? Because we didn't know anything. Like there wasn't food on the shelves.
No, one more.
Shelves.
By the way, have you been to a Rite Aid lately? They don't have anything on the shelves. No, that's another story.
I don't even
Rite
know
Aid. What a depressing place, bro. Rite Aids are like worse than banks. Like as depressing as it is to walk into a bank, like in 2025, Rite Aid is even like more depressing. Because like Rite Aid used to be cool. Not anymore. Now it's just empty shelves for days.
When's the last time that you went to a bank?
I unfortunately am at a bank more often than I would like to admit. I'll
tell you.
Bank, Spencer.
I'll tell you. I was at a bank a month ago. I go to a bank I probably go to the bank like 2-3 times a year.
I go to the bank and I'm like the mayor in there. I'm high-fiving the managers and stuff like that. Like you don't even know. So they're like, "Oh, JC, how's that company that you invested, that tequila company?" They're like, "Oh, is it going well?" I'm like, "No, it's zero." They're like, "Really?" I'm like, "Yeah, it happens, you know." Like they know my private investments already. Anyway, so one more thing that I wanted to mention today before I hop. The great financial crisis, it was literally a credit event, right? Credit just froze across the board. And, I'm old school. I get back to the banks, we don't have bull markets without banks. If the banks are healthy, how bad could things be is really how I look at it.
Yeah.
During the great financial crisis, it was the banks that were leading the way lower. During COVID, if you recall, Mr. Strazza, the reason we were so bearish had nothing to do with any vaccines or whatever, or any viruses. It was literally because regional banks were making new all-time lows relative to the rest of the market, and banks were breaking down for sure. Today, financials are one of the best. Financials are up for the year, for the record, and in the United States, and European financials are up 26%. European financials, these are the worst companies on the planet. They're up 26%, and you're telling me that the world's coming to an end? Yeah, I don't buy it. I'm old school. I'm with the financials. You follow the banks. You get the banks right. You get the market right.
All right, but hold on. Is it this simple? Because I said something earlier, and you didn't even hear me. If international stocks, say particularly developed Europe, right, the big markets outside of the U.S., if they keep trending well, is that some of the best information we have? Like, is it as simple as that? The United States will follow. Maybe they don't lead the way that they used to. Maybe we don't see that same kind of outperformance we've gotten used to from U.S. growth. But are they going to be going down while the rest of the world is going up?
I don't think so. Sideways or up at a slower rate would make sense. Going down on an absolute basis, I don't think so. And then what's hilarious? It's so funny. Thank God for economists. Like if it wasn't for economists, we wouldn't have so much money. The economists keep telling us that Europe is in a recession. Europe is such a disaster. Look at Strazza. Is this like a feature or a bug?
What?
You don't see him?
What?
You don't see him shaking his head like that? Is that just me?
That's just you.
Oh, all right. They keep telling me that what we're seeing in Europe is just a massive recession, that Europe is a complete disaster. The economy's in the dumps. Stock market looks great, so I will take the other side of whatever the economists are looking. The thing is with the economists is that they're always looking at backwards-looking information, while the stock market is forward-looking, right? It's a discounting mechanism. So if you ever wondered why economists are so wrong so consistently, it's because they're looking at the wrong information. In case anybody's wondering, like, why is it that economists are so wrong? It's not that they're dumb. In fact, they're usually really smart. usually too smart for their own good is really part of the problem there. They overthink the market. Instead of looking at what we know works, they look at the things that we know doesn't work, right? Very odd. I don't know if you ever met an economist.
Of course.
They're weird. They're like weird people.
Point of clarification: you said financials are up this year.
Yes.
I'm seeing XLF down about 1%. On my,
you got fact check, dog. You just fact check.
Okay, you're just proving my point even more. I mean, so they're down less than 1%. Is that what you're telling me?
Yeah. Oh, so they're up relative. That's what you mean?
Do equal weight.
They're flat for the day. Let's see. XLF is right now down 90 basis points for the year.
That's
all
right.
right.
Okay.
Anyway, my point is financials are not down this year, right? Like, just all right, guys. On that note, I'm out.
Wait, JC is just fucking.
Why'd you do that?
I didn't do it. JC, I did know that he was going to leave early today. I didn't know how early he was going to leave. I didn't know that you were going to have internet issues today as well. And Patrick is supposedly going to join us today. I hope. I hope he can. In the meantime, we're gonna have Kenny hop in a second. But I know before that you wanted to go over a scan that goes out every single Wednesday / sometimes Thursday morning. Young aristocrats, right? Is that go out Wednesdays? Did I make that up, or
That's once a month?
It's monthly. My bad. Monthly. Okay, we have this scan here. Let's bring it up. Okay, I'm gonna make this bigger here. First, explain what we're looking at here.
We are looking for stocks that have grown their dividend yield for 5 to 9 years. That's a because we thought we would go that time frame, which is far shorter than something like the dividend aristocrat.
Wait, Steve, stop. Hold on. I'm gonna interrupt you. Turn your camera off. I think that might help your audio.
Okay. So the whole idea here is to find stocks that are consistently growing their dividends, but to find them when they're still young. Hence the name we call the young aristocrat, as opposed to their dividend aristocrat peers, which have grown their dividends for far longer. But for that reason, they're often, much more mature stage of their life cycle. So we have caught names on this scam, like Nvidia over the years, a couple different semiconductors names. You get the banks on here, you get REITs and all that stuff, but a lot of the names are industrials or small caps or materials names that are out there raising their dividend year in and year out. Nobody really knows about them. And oftentimes we find that the best companies that pop up on this scan are not the ones with the biggest dividends, but the smallest. Right. Oftentimes it's those little yields that get ignored and they don't get, included in certain dividend funds because they're under 1%, but it's the below market average dividend yields that often become the best performers on these scans. So that's exactly what we're looking for.
And there's no real sorting. Like this table it's an alphabetical. It's not an alphabetical order. Actually, it might be, but you're not sorting by yield or by the growth or. There's no real before because we get asked about
we will not kick a stock off of this list for having a low dividend. For example, when we caught Nvidia on this list, Spencer, I don't remember exactly what it was, but their dividend yield was like 0.25%, 0.3%, tiny, right? So we don't kick those names off for good reason, right? Just because they pay maybe a smaller dividend, maybe they're investing their money back into the business because they have great opportunities to do so. So we don't discriminate based on a small yield. What we do is just kind of sort them at the end by relative strength, the same way we would do any scan. So we're going to look at momentum and relative strength. Once we have the universe with the dividend criteria that's met, then we're just looking for the best charts. Because what you find with these dividend names is you get paid more on the price appreciation than the dividends, the good ones, right? So you don't want like a 5, 6, 7, 8% dividend trap kind of yield. You want the 0.5%, 1%, 1.5% yield, and that stock could be a double this year, right? Because it's growing and has other good things going for it.
I'm a little bit surprised. Whoa, what the hell happened there? A little bit surprised to only see 1, 2, 3, 4 real estate, 5 real estate names on this, because typically you associate that sector with and REITs really because with dividends because they have to they have to pay them out. But I'm surprised it's only 5 on this list. I'm sure there are more that are in the universe writ large.
Yeah, I wish I could see the table. I can't even see what's on there.
Agri is number 1. They're a REIT. VC or VC number 2 or number 3. You've got, what else you got on there? You got Essential Properties, EPRT. You've got Equity Residential, EQR.
Are there a bunch of industrials on the list?
American Homes. I guess there's 6. American Homes, Postal Realty.
Listen, are there a bunch of industrials on the list?
There are some. Yeah, I mean, it's pretty diversified. You've got most of the sectors here. I don't see any technology, but why would you? Yeah, you got some industrials.
You'll see plenty technology in the right times. The reason you're not seeing tech on there right now is because there's very little momentum or relative strength coming from that.
So again, it's not so much about the yield. It's not so much about the 5-year dividend growth or even the payout ratio. It's really just about the say, hey, this is a pond to fish in, right? If you want to avoid the dividend trap, right, and end up making more of your money from dividends and actual capital gains in the long run, but you still want that dividend exposure, this is the pond to fish in. That's basically the point of this scan. So this is one of, I don't know, a dozen maybe more scans that the All-Star Charts research team is doing, that Steve is leading. I'll drop a link in the chat for this if you want to get this scan.
And like this is one of the favorites for sure. People love this scan, and what it really boils down to is like so many of the scans that we do, it's just a quality filter. All the dividend stuff. Then what you're left with is a list of companies or a list of stocks that have proven that they can consistently return a higher amount of cash to shareholders year in and year out. Through COVID, through the 2022 bear market, right through right now. These companies keep increasing their payouts. So what are we left with? A list of names that's probably a higher quality universe than it would otherwise be if we didn't have those filters. Then we're doing just like we always do. We're overlaying our technical filters, finding the top performers and the leaders. So it's great. Quality filters are the way to go. Market cap is a quality filter, right? This is just a little more advanced.
Yep. All right. I'm going to bring on Mr. Kenny Glick. This is a big day. I'm actually very excited for today. Kenny and I are doing a live event at 4:00. We'll talk more about that. But we timed it with earnings season because he is he's always active, but he's like especially active during earnings season. He has more stuff to trade. I want to see what he was doing, maybe dipping his toes in IBM this morning. I don't know. Let's find out. I have no idea. Kenny, are you here? Where are you at? Yeah, he's around. All right, cool.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Yo,
my man.
What are we doing this morning?
We're in a bunch of stuff. I'm in the bull right now. Just went green. I'm loving this stock. BULL.
Yeah, that's been. You were telling us about that yesterday. That's been.
Yeah, it's odd that I haven't shorted it once. It's been on the way down these last 40 points. It's been yesterday wasn't that good. You only had one move, but it's been pretty good. So it just faux show broed and broke VWAP. So, but IBM, the Qs, Procter & Gamble, Hasbro. There's so many stocks on the list today. A lot of them have had some decent moves already, but yesterday's action was just crazy because we were talking about how I might not be shorting, and then 5 minutes later we're shorting. So you never know what you're going to do. That's why I let VWAP tell me what I'm going to be doing. So again, I think we're going to have a kind of a boring day. And boring considering we've had
Don't say that.
20-point ranges in the Qs. I'm going to say we only have a 5-point range today on the Qs. How about that?
Wow.
Go back to the normal trades.
So Kenny, what do you do? I guess now in the next 2 weeks or so, you've got 100 earnings reports a day, and I know you typically like to trade you like to keep your list small for that day. The list is always changing, but you don't like to trade 15 things. You'd rather trade like 4 or 5 things, right?
Yeah.
So what do you do? Like, I guess, how do you narrow it down like that?
You know what it is, considering I've been doing this my whole life, and I stick with the biggest market caps, usually the ones that have the most volume, because more volume, more better, which we're volume weighted average price traders. And I also become familiar with which stocks tend to cooperate. There are just stocks that just like Chipotle. Somebody asked me, so what do you think about Chipotle? I don't care. The stock is awful to trade. It really is. It's just there's lack of volume. They open the spreads. It's always been a terrible stock to trade, so I don't even look at it. Stocks like Pepsi. I'm a fan of Pepsi. I drink it every once in a while. Stock's not really that great to trade. Or Merck. Merck reported earnings. Nobody cares about Merck. But American Airlines, again, you'll have usually some decent volume on it. It's a cheap one. I'll keep an eye on that. So, even like Nokia. Nobody trades Nokia anymore. But every once in a while, the stock has something, a decent move intraday on an earnings report. So I'll keep an eye on that. So generally, the lower risk trades with a lot of volume is where I want to stay focused. So I look at this list and, like something like Hasbro, it's gapped up big. I want to short it because it's gapped up big, but there's just not a lot of volume. So in these cases, you just wait for the volume to come in, the 9:30 open when the market starts to rip, you'll get some more volume. So I just go back and check on those symbols. But there is if you have 80 companies to that report, I'll stick to the top 12 or 15 of them. Those are the ones that have the most volume, the biggest market cap. And generally, the reason for that is that they have the most liquid options. So on Thursdays and Fridays, I like looking at options as well because we trade the weekly options that are expiring at the end of the week.
Right. And I would imagine that the higher price stocks are just sort of more difficult. Right.
Right. Like a ServiceNow. Somebody was asking about
Chipotle, ServiceNow. Yeah.
Yeah. ServiceNow is a little bit too big even for me. Again, you'll get a move, but, generally I don't want to risk 5 to make 10. I'd rather risk the 30 cents to make $1 or $2. And that's kind of where I've been living for the last 15 years.
All right, Kenny, I am super hyped for this afternoon. You and I are going live. The link, everyone, is in the chat. If you have not registered, do so. We are sending out the link after the show, the watch link for those who register. This event is not going to be on YouTube. It's going to be on our site. And Kenny can talk about these setups and these trades for a really, really long time, right? There is a stunning amount of detail. He's going to go through basically how he does it every morning, the list that he gets, how he finds his names, and then what he does in detail. Like what he does on our show every day is great. We love this, but it is just scratching the surface of all there is to know of VWAP and how to use it throughout the day, throughout the morning, and then into the day itself. So today, 4:00, me and Kenny, we're going live. Every time we do one of these, this I think is the second, maybe the third time we've done this. I learn a ton. There's always more to know because it is simultaneously so simple, but how do I explain it? It's simple, but there's so much to talk about, right, Kenny?
Yeah, and also transcends all market environments. If you were trading VWAP with us these last 3 weeks, you'd be shocked at how some of these levels that even though in this massive volatility, it was right there. You saw where it wanted to go. You saw where we're going to retrace to, and you see it. You see the market just a little bit more clearly, especially for the day trader. And then again, if it's not just about day trading, you can expand it to any time frame. That's what's fantastic about it. So yeah, and also again, listen. After we're done with our event, I got a special treat because if I'm around tonight, I might invite everybody back for even a follow-up session. Ooh. if I'm feeling awake enough. So I'll let you know about that later today.
Yeah,
so
that's the beautiful thing. Like you said, it's every kind of market. And it is sort of like you always say the market is rigged. I never quite know, how if you're just being over dramatic or not, but it is wild to see it happen in real time, right?
Yeah,
you're gonna walk through that. It is crazy.
I'll show you some stuff one day. Even during the flash crash, when it was massive chaos. We hit very specific VWAP levels even on that day, and that was when me and my buddy Solid, we were like, you know what? this whole thing's pre-programmed. and since then, it's been a while. What was that? Oh, I don't even remember when the flash crash was, but
dude, that was like 10 years ago.
Right. And since then, and again, even that 443.14 on the Trump spike, and then when it went to that same exact price, those are those moments where, take it for what you think. I mean, we're going to exact prices as if it's programmed, and I believe it is. So that's the way I trade. And listen, I get proved right every day. So wait till I show you wait till I show you what's up. So it's a lot of fun. I love opening people's eyes to this stuff. Again, I come from the old school way of investing. My dad has been an investor since he was a kid, and his father was an investor. So they're all about fundamentals and believing in that bullshit. So again, I like showing people what I see. So
thank you. What Peter said is great in the chat. It's simple but nuanced for sure. Yes, and it's a great way to end it. You are asleep, and Kenny is going to wake you up.
From the Matrix, my friends.
Yes, this is going to be your entry into the Matrix. You are Neo. So today, 4:00, I'll be there. He'll be there. I hope you join us. Kenny, we will see you there. It's going to be a blast.
All right, rest up. It might be a long night too. So,
oh boy.
All right. Later, guys. Good luck.
All right, Strazza got his hotspot working. Is that true? Is that true, Steve? Wait.
How is it?
Oh,
pretty good.
Great. You look
pretty
great.
good. Right.
So you're having internet problems this morning. It happens to the best of us. But you got it worked out, which is great.
I want to talk about the V. Is anybody else getting harassed by the solar salesman? Didn't you have a story about this?
Dude,
I'm getting I
freaking dodged a bullet. I almost jumped into a bomb and then I sidestepped it at the last second.
Man, they're hitting up my town right now. I'm getting texts. There's somebody walking around. I don't know. Bull market for solar energy. Not according to the charts, though, right? We could talk about VWAPs. It seems like it's a slow news day, Spencer. I'm looking around for stuff to say. PayPal and Coinbase expand partnership to drive innovation of stable coin-based solutions. Probably not a big one. SoFi helps student loan borrowers navigate life transitions with new flexible refinance options.
No.
No,
nothing here. If you want to run through some stuff here, IBM. This is funny. IBM's earnings report was actually pretty good, but then they talked about how they've lost a bunch of government contracts because the government is cutting spending, right? The whole Doge thing, and so the commentary sort of overruled the. It seems like overruled the actual numbers, right?
Just the announcement that he's leaving Doge.
I'm talking about IBM.
Oh, I thought we were back to the Elon.
Sorry, no. So IBM's numbers.
Say about Doge?
Their numbers were good. They said that they lost 15 of their U.S. government contracts, which comes out to about $100 million, which isn't a lot for them really. It's, but it's not nothing. And I think it's just the overall. I know they reported declines in their consulting revenue, and their software revenue was down sequentially.
No, I would think Amazon would have lost a bunch too, but maybe IBM just had some of these like old bullshit legacy contracts from maybe 20, 30 years ago that nobody was paying attention to anymore.
Maybe.
Right? Amazon's probably got the new stuff, but I'm interested in how much Amazon lost because they have 1 million contracts with the company.
We'll find out next week. Alphabet isn't Alphabet tonight, Alfonso? Right? Aren't they on the calendar for? Did I make that up? I did not make that up. Alphabet's tonight, and then Amazon and Apple and all that will be next week. So should be fun.
Here's an interesting one. Some interesting CEO commentary. This is the Whirlpool CEO. They make appliances. Even a 20% tariff changes commercial behaviors, but 20%, frankly, does not move factories. So if the stated intention of the administration is to move factories, they know, the administration is well aware, it needs to be more than 20% to really start moving factories.
Okay. I'm
bullish Vietnam. I'm bullish Vietnam. I think they're going to get some factories.
Well, that's what Jeff Mackey sort of keeps saying is,
really?
It's not so much bullish Vietnam because he's coming at it from a retail point of view. But he said like if a country like Vietnam could get an exemption, then every retailer would be saved because they would just like move their operations to Vietnam, right? Like as fast as they possibly can, and then they're safe, right? So all it takes is one. All it takes is one exemption.
So I saw a headline that U.S. and Vietnam were meeting yesterday.
Yeah.
Did anything come of that?
I didn't see anything. I saw that they were meeting as well, but I didn't see what came of it.
Pepsi CEO. Relative to where we were 3 months ago, we probably are not feeling as good about the consumer. Thanks, Captain Obvious. Jesus Christ.
Pepsi's flat. Again, you don't have a lot like Chipotle is flat, right? It's down like 1%. Whoop-de-doo. What else do you have here? Nothing is moving.
Ooh, here's a good one. This one's real good. Oh, this is juicy. Deutsche Bank cuts year-end S&P 500 target to 6,150 from 7,000. Deutsche Bank.
I give them credit.
They had 7,000 on.
I give them credit for modifying their year-end target in April. A lot of these banks do it at like the end of Q3. And it's like they're
basically saying we finished the year back at the all-time highs that we came in at.
Yeah. Did you see that tweet going around yesterday from what's his name? Is it Ryan? Is it Ryan? I'm probably butchering his name. Ryan Patterson.
The shipping CEO.
Yeah.
Ryan, whatever. What was it? I didn't see it, but he's good.
Shipping volume. So the slowest days of the year are typically like Christmas and Thanksgiving, and in terms of like shipping activity, and we're there right now. Wonderful. Yeah. And talking to Jeff again, Mackey, he was saying that all the retailers, they do their holiday shopping, their holiday ordering. They do it now. They order the holiday season right now. Back to school and holiday, right? That's what's being ordered right now. And if you can't get clarity and order your stuff now, then there's going to be empty shelves in 6 months. That's probably what the retailers all said to Trump when they met a few days ago.
Wait, Trump canceled Christmas?
That's what they told him, I'm sure. So, yeah, I don't know.
Everything's going to be okay. I have a strong feeling that we're going to come out the other side of this, and it's going to be just fine.
I will maintain my idea that if you have a significant chunk of capital to allocate, the best way to do it is to just set a schedule and do it on said schedule and not trying to tell. That's what I'm doing. So far, it's been working for me, and it really cuts down on the behavioral effects of the market going up and down every day. So that is my plan, and I will stick to that plan. Whether we're up for the day or down for the day, that's what I got going on. Okay.
Japan to resist Trump's efforts to form trade bloc against China. China launches a special campaign to facilitate cross-border trade. I don't know what that means.
I don't know either.
It's all China out there.
Yeah,
that'll be interesting. I don't know how that actually works if they allow it, but like Vietnam could just start taking China's business. I don't know.
Yeah, it could.
I don't know how that really works out there in Southeast Asia. I think China's probably of the opinion that they own all those countries at the end of the day.
Well, I'm sure they think that.
I'm just saying, like, China's not happy if Vietnam and Malaysia and the Philippines are taking their business.
No.
So I don't know how that works for them. They could be punished economically probably pretty easily by China. Feel me?
They'd be even less happy if the U.S. took their business, which is not. Let's be real. Not going to happen.
You heard the Whirlpool CEO.
Whirlpool, shout out Michigan. They're from like Grand Rapids, Michigan.
This will be interesting, how this all shakes out. What do you think they'll say in the history books one day about this? Trump is scheduled to talk around noon today. Big deal. We got to cancel our meeting. What time's our meeting? 1 o'clock?
1 o'clock.
All right, we're gonna have to move that.
Dude, what are they going to say? This is going to be This is going to be one paragraph in the history books. One measly paragraph. There was a trade war, and eventually it ended, and then that's what they're going to say.
You're probably right, Spencer. What a snoozer Besant was yesterday.
Oh, I didn't see that.
So, I mean, look out. And that was a risk yesterday. Some green to red action. That's always going to be a risk when we have a big gap open, gap up open in this kind of environment. So today, are they going to sell the news again or sell the announcement or whatever? Came out around midday yesterday with Besant. Now Trump's going to talk around lunchtime today. So watch the price action around that.
One of the things about the public statements is I feel like the market can kind of sniff out when the motive is the market, right? Like I feel like the market can tell, oh, you're just doing this to pump the market. They can sniff that out a little bit, right? That's just my sense. The more you have these like public press conferences or statements or whatever, and you announce it ahead of time, like all this pre-announced stuff, I feel like we can kind of see through that. You know what I mean? Yeah, you're going to be rah-rah. It's not so bad. Everybody buy stocks. I don't know if it's that simple.
China's playing hardball still. Who knows what's going on behind closed doors, but they're saying nothing is going on. All the tariffs should just come down. Here's a cool one. On corporate earnings calls this quarter, the term recession has been mentioned on 44% of calls. Compare that with less than 3% of calls last quarter. We're recessed.
I mean, we, to the point that JC was making, like we could already be in a recession and we don't even know it, right? At the same time, you're getting companies like American Express and Capital One saying that so far from their consumer behavior, their customers, nothing's really changed. Granted, American Express has a more affluent customer base, but Capital One is saying that so far in Q2, not a lot's changed. Granted, Q2 is 3 weeks old. I don't know. You got to take their word for it.
We were at Future Proof, less than 2 months ago, and they do little interviews around. Somebody asked me, will the U.S. go into a recession this year? When will the next recession be, or something like that? And I said, we're probably in one or headed there now. Yeah. And people laughed, and they're like, why? And I said, well, it's been a while.
Really? No, it hasn't. It's been like a year and a half.
That wasn't real. Biden changed the rules.
That's right. Yes. 2022 wasn't a recession, except it was.
Don't count it.
Anyway, okay. Look, why don't we get out of here early? Okay, I guess Patrick is not joining us, which is sad because I was hoping he would. We have things to do today. We got a lot going on. Okay, so Steve has his weekly strategy session for members of Breakout Multiplier. That's at 11 o'clock. That's every Thursday at 11 o'clock, by the way.
It's going to be a good one. It's going to be a banger. It's going to be a good one today.
Yeah. Okay. So if you do not get Breakout Multiplier, you want to get these trades. Steve is hitting doubles, triples, and home runs. Go to breakoutmultiplier.com. That is step one, and then sign up. That's at 11 noon. Sean's options jam session. Okay. If you want to see what Sean is doing with his options portfolio, he walks through what he's doing every single week. That's also today. That's on YouTube. I mentioned the thing with Kenny at 4 o'clock. Gold Rush Live with Sam and Jason at 2:30. That's also on the channel. So we got 4. And then we have Louis doing his thing, his crypto thing later tonight as well. So that's for his members. So got a lot going on today. We got Louis, we got Sean, we got Kenny, we got Jason and Sam, we got Steve. So basically everyone is doing something today. A ton of content's going out. If you do not get any of that research, allstarcharts.com, stockmarketmedia.com. There are links, there are pages there to sign up for all those products. Don't forget all the free research in the description on YouTube, Chart Report, Hot Corner, Strazza Letter. Those are 3 of like the dozen free notes that go out every single day pretty much across our network. So a lot going on here. We are in the market might be slow, but we are in a fast market. We got a lot going on today. So let's get out of here. I apologize. It's early. We'll be back tomorrow. I promise. And then I already have a full slate of guests booked for the next 2 weeks, Strazza. So we're all good.
I think we should do a new segment on the show. Never really done this before, and just read silly press release headlines. Can I read one more before we get out of here? And you got to watch Kenny and Louis today. They're both killing it. Louis, what he's doing with crypto. Had a long conversation with him last night. A lot of new and exciting stuff coming from Louis. So J&J Snack Foods refreshes the Super Pretzel with a bolder taste and softer texture.
The Super Pretzel is like the New York thing, right?
I think it's the one that you heat up in the oven.
Oh,
it's like
okay,
game like a ball game pretzel.
Right. That's what I meant.
There's some really good stuff in the press releases, that we probably don't talk about enough. Like Super Pretzel.
Good is a strong word. It's a lot of nonsense. My favorite is the healthcare / biotech PRs when when they don't meet the primary endpoint, they still make it sound good in the press release.
I know.
You have to actually read down to, oh wait, no, this was not good. It sounds good, but it wasn't good. Right.
I want to read out more of those biotech headlines like yesterday.
Yeah.
I don't know what any of them mean.
Well, look, here's the thing. You don't. I learned this 10 years ago. You don't have to know what any of the words mean. You just have to look for the words met or did not meet primary endpoint or secondary endpoint. That's all that matters.
I know that, but Summit Pharmaceuticals said something crazy yesterday, and it was great news because the stock was up 21.5%. How's that? I know it was good.
Every day there's
before we go, Spencer, one chart for the road here. One chart for the road. Fonz, you know what it is. This is the most important chart out there right now. Drop the link to your post from yesterday, from last night. Alfonso wrote on this, and this is what we're all looking at right now internally. This is a textbook VWAP pinch. Brian Shannon writes about this in his books on the anchored VWAPs, and all we're doing here is we're anchoring from the pivot lows from earlier this month, and we're anchoring from the pivot highs from earlier this year, the all-time highs at the index level. These two lines are going to continue to converge and get closer and closer, right, as price stays in this range and chops here. And then what is eventually going to happen is you're going to get a big resolution out of this pinch formation, right? It's going to end up being a little coil. We're going to probably call it a bear flag soon, right? You have a downtrend coming into a coil situation here. Watch these two lines. If we violate the VWAP from the pivot lows, I think you're almost guaranteed a quick retest of those pivot lows, which are also the prior cycle highs. Absolutely critical level, right? We started going there Monday, big save so far this week. Now we're kind of getting capped at the VWAP from the highs, right? That comes in around a key level at 550. If we blast through there, you want more and more long exposure, and you want to be so open, right, to the idea that this could be a V-shaped bottom and recovery. Right? You want to be really, really open to the idea. If we're above 550, we take out this VWAP from the highs. You want to be open to the idea that maybe this bottom is more like the pandemic bottom from 2020 and a lot less like the prolonged rounding bottom from 2022. Those are your levels, Spencer.
Root for a VWAP convergence?
They're going to converge, right? As we chop here, those lines are going to get closer and closer, and they're going to create a natural apex, and one of them will eventually get broken. Yeah.
All right. We shall see. That is a good chart. Good job, Fonz. Let's put the link in the chat.
On your charts. Everybody at home, put these two lines on your charts. Let these VWAPs navigate you through this volatile time. That's what we're doing. We'll talk about it today and break out multiplier.
All right. The link to Fonz's post from last night, again, totally free, is in the chat right now. All right. We're done for the day, or we're done on the show. We're not done for the day. A lot going on, as I said. Thank you for watching. If you want to be kind and nice, and you can drop the like and you can hit subscribe and tell your friends, we'd always appreciate that. Thank you, chat, as always. We love you guys. We will catch you later on any one of our shows. I will see you guys at 4 o'clock with Kenny, Steve. Hopefully we'll see some of you in like an hour and a half or so, right? For his video, Break a Multiplier. So we'll see you guys there. Thanks for watching, all right? Go make some money.
Bye, buddy.
It's nice out.
I can't take no loss. I don't even know what it costs.